Welcome back to today's episode. And if this is your first time coming across this channel, please do well to hit the subscribe button, like, and comment below. Feel free to always drop your question in the comment section and that will be attended to. And to our returning subscribers and viewers, thank you for always watching. Thank you for always liking and leaving a comment below. Do well to also enjoy this episode and feel free to always drop your questions anytime. Feel free and we'll always get back to you. Okay, back to today's topic. Today we'll be discussing decoding the change of character and break of what structure validation for trading mastery. So in this topic, basically we'll be looking at what the change of character and break of structure and some of those traps or the way to validate a valid break of structure or change of character, because a lot of traders they are having issues with this particular concept where some of them end up marking what some wrong zones, some invalid zones, and which makes them to what take some wrong setup. So today, you know how we'll do it. First, we always what do our diagram and illustration where we'll get to what look at what samples before we dive into the main chart. So stay tuned, keep watching, and don't forget to what hit the subscribe button, like, and leave a comment below. Thank you. Let's go to the sample now. Okay, so we'll be looking at we'll be looking at a valid change of character or a valid break of structure. And also we're looking at what the errors or some of the mistakes some persons or some traders make while marking those zones. So let's dive into it straight away. So in here, let's say we're in a bullish trend, you have this market come back to this other block and you have something like, let's assume this is a candle wick and it will wick below this high, then come back to this zone. Now, for some traders, when they see that they already have this wick, what they will do is what they do is they come here and maybe mark here as, let's assume, a change of character. But in the ideal sense, a candle closing with a wick is not a valid break to the upside or to the downside. You will consider a wick as a sweep of liquidity, meaning what? You now have a new high here, you now have a new high here, or low. So what do you want to see at this point? What you want to see is you want to see market either come here, continue to the upside, or what take out this low to give you a valid change of character. So when you see those setups where what your analysis or your candlestick doesn't get to break above with a body candle close, or body candle close below, that's an invalid break of structure. That's what you have there is what a simple market liquidity sweep. So don't always confuse liquidity sweep with break of structure. So how do you identify a valid break of structure or a valid change of character? Let's get to the chart. So first, you want to see your market moving this way. Market come give you a valid break above. That's the difference. Here in this place, you are having what? This trend breaking above this previous one with a body close. Don't worry, we'll go straight to the chart where we'll take like two or more examples so that you will get to understand what I'm explaining better. So let's go into the live chart now. Okay, so let's look at this first example, and if you're still watching, please don't forget to like and subscribe so that you don't get to miss out on any of our content here on this channel. So let's look at the first example. We're on Euro USD 1 hour time frame. So let's start. For example, we have this high, and if you look at this high, look at it closely, you will see that you have a body close. Having a body close signifies what? A valid what? Change of character. Because if you see the market was coming what? The market was going down, you're having what? A downtrend in market at this point. Although the market was still bullish, but there was like a little correction. So how are we going to be sure that the market is reversing? Now, when you have this change of character here and changing with what? A full body close. Having this full body close, that's what signifies that what? You now have a what? A change of character and the market is changing to the upside. Followed by what? A break of structure, followed by a break of structure at this point. You have another break of structure at this point. You have another break of structure here. Now you have overall what? Break of what? The external high. This was the external high. So this has been taken out. So what do you want to see in this scenario? You want to see what? This is what? Your inducement. This is your inducement. But for some persons, they would be considering this point as what? An order block, because what? It broke previous what? Previous high. No, that's an inducement. So where is the correct zone to actually take your trade from? This is the correct zone to take your trade from. Why is this the correct zone to take your trade from? If you look at this zone, we have what? Liquidity before our zone, and there's a fair value gap right under that zone. Let me zoom it out so that you get to see better. If you look at this point, there is what? A fair value gap below this zone, and this is the most protected zone to actually take your trade from. So all you have here and here is what? Your liquidity pool, making this zone what? A valid zone to actually take your trade from. Now let's look at the second example again. You have this high. This was the last high. This was the last high where market was what? Pushing down, and this was the low that was taken out. Look at the low that was taken out. Now we actually want to see market push above this high before we can conclude that what? We are in what? We are back to an uptrend for us to continue taking buys to the upside. So what do you do? If you look at this candle wick, and in this candle wick, what do you see? This is a wrong break of structure to the upside. Why is it wrong? There is no full body close. There is no full body close. So in this is where the trap now comes in. In this particular second scenario, you see that what? The market wicked above this previous high and what? Continue to the downside. So how do you want to what? Be sure that this is not a trap and a valid break of structure to the upside? Now this is the current high. This high has been taken out, so this is what we now have as the current high. So look at the current high. We want to see market what? Break above that point. That's what you want to see. So in this scenario here, you now have a what? A valid break of structure. It's a very simple concept. It's a very simple concept, but if you don't understand the logic behind all of this concept, one after the other, you just mix everything up. So while you're marking your zone, always make sure that what? You have a proper body close above the zone you are looking at or you want to take your trade from. And when you have a full body close, that validates that okay, the other block below that zone, it's a valid order block, or the change of character you have or the market break or structure you have, it's a valid one. But if you have candle wicks, then it signifies that what? That is a what? Sweep of liquidity. So don't mistake these two concepts together. Now let's take another example and we'll come to the end of today's section. And if you're still with me up to this point, please don't forget to what? Subscribe, like, and turn on the notification bell so you don't get to miss out on any of my content, subsequent video dropping, and I'll be dropping more educational videos. Don't forget to what? Leave your comments below the comment section. If you have questions, I entertain questions. I respond to all comments below my comment section. Do well to stay tuned and keep watching. Let's go to the second example now. Here we are on the second example. So let's look at this example here. At this point, we have our what? Break of structure to the upside. The market was bullish and we have this tiny what brick of structure to the upside. And what do you have? You are left with what? This other block here. You are left with this other block. And what? You see, you have your liquidity there. The market has to come back to take out. But now, let me take out this stuff I just marked. If you look at, this was the last low, the engineered liquidity before our zone. We also have, this was the last high. If you look at this high, what did you see? Market what? Swept liquidity. There's a sweep right there. There's a sweep right there. And let me zoom out so you can see better. And what do you see? Market wicked above this point, which what signifies that what there is a transfer of what high to this point. So at this point, this is the high you want to see what market taking out to signify that what you are now in a what uptrend. And if you see in this second example, what do you see? You see full body closed. There's a full body closure at this point, and market what ran back into what this supply at this point here before what continuing to the downside. So where do you want to identify what your change of character? This is the last low. This is the last low at this point, and what you have this high at this point. So what market taking at this low with a full body close signifies that what there is a change of character. So we should be expecting what the sell or the what the sellers to what continue the trend to the downside. So it's just a simple concept, and you just have to make sure that what when you are doing analysis, you have to take time, be disciplined, patient, and what calm down and what or look at your chart properly, because one mistake from your analysis can what make you have series of losses. So you have to be very careful when you're what doing analysis, and what take your time to watch out for your confluences. There's no point of you rushing. There's no point of you trying to take multiple trades. With just one or two trades in a month, you will still be very profitable on your account using the strategy in my previous video. So if you've not watched that video, go back to my previous video before this one, and what I explain all of those confluences and how to what with one setup be able to get at least uh minimum of 1:3 to at least 1:10 win rate in a single trade. So just with just a single trade a month, you're good to go. So what stay tuned, keep watching, and don't forget to what subscribe.